A little about our FFIUL. As I mentioned, the FFIUL Financial Foundation Index Universal Life product has been the number 1 selling IUL in the industry for the last 11 straight quarters. And that's based on app count. So we've insured the most number of insured policies for the last 11 quarters for IUL. So it's pretty cool. We sell a ton of it. It's a flexible premium permanent life insurance policy, right? I think the key thing here too is it's important to remember, some folks out there have thought to present this is an investment. This is not an investment. This is a life insurance policy first, right? It has a cash element that can be beneficial, obviously, depending on how you design these. There's a number of ways that this policy can be designed. But the thing that I like about it most is that it's a pretty transparent illustration. When you go in with your client, you're looking at the illustration, it's pretty easy to just explain to them how the product works. But right off the bat, I think the most important thing when we're looking at IULs is our index accounts, right? We keep it simple. We've got 2 index accounts. There's the S&P 500 and the global index account. Okay, S&P 500, pretty straightforward. I think a lot of carriers out there have an S&P 500. It's a 100% participation rate. I'll go over the details on the caps and the floors here in a moment, but that is an option. You can do a mix of the S&P and global. So you could, for instance, do 50% in the S&P, 50% in the global if you wanted to, or however you want to mix it up, as long as it equals 100%. But the global account has the S&P included in it. And the way that works is 50% weighting is going to go to the winner of the S&P or the Euro stock. So it's made up of the S&P, Euro, and Hang Seng. 50% weighting, majority weighting, is going to go towards the S&P or the Euro stock, depending on which performs best. So the cool thing is, it's kind of like picking the winner of the horse race after the race. So you get to pick the winner every time. We put 50% weighting towards that. The other 30% goes to the loser of the S&P 500 or the Euro stock. And then 20% weighting always goes to the Hang Seng. So that's kind of how the global index account works. I like this one because it's diversified. So you can kind of have a little mix, a little more safety, if you will, than just putting everything in one account. But like I said, if you wanted to, or if your client wants to, you can do a mix of both of those, however they choose, as long as it equals 100%. So that's a real quick example of what our options are for the index accounts. Now, this is a little outdated. I found out this morning. This needs to be updated. So our floor on the S&P 500 account is 75 bips. So 0.75%, that is our floor. The current cap rate is actually 12.25. So we just increased it 25 bips in December. This form needs to be updated. So it should read a cap at 12.25. We've consistently had some of the highest caps in the industry because we do our own in-house hedging. So we actually have a team in Cedar Rapids at our home office that does dynamic hedging every single day, and it allows us to save some costs, and we don't outsource that. So we're able to buy up more higher cap. And what that does is allows us to have a higher illustratable rate, right? So we illustrate a 7% rate. So when you're in there running a quote, you'll see we're at 7%. A lot of other carriers, when you're running IULs, might be at 5 point something or 6 something. We're at 7%. It's high. I get it. You're going to hear people say, well, you need to take TransAmerica's and rein it back because that's not realistic, right? 7% isn't realistic. But it is. We were just named one of the most accurate illustrations, IUL illustrations in the industry on Forbes. So when you see down here, the 20-year, this is a look back, 20-year look back, which is pretty standard for IULs, right? So 20-year look back, the S&P index changed 7.52%. Our index actually changed a little over 8%. So we're crediting a little over 8% on the 20-year look back, but we're actually illustrating 7%. So what you see here, there was a down year, right? Minus 38%. Our floor hit 0.75. Great, saved us. But the key thing is that I think an important thing to know is TransAmerica's, I would say, more of a conservative company, right? We don't want to overpromise and underdeliver. We have a little bit of a buffer there, right? We could illustrate higher if we wanted to. Actually, we could illustrate over 7%, but we choose not to. Even though the 20-year look back, if you took our 12% cap and plugged it in the industry for the last 20 years, would actually return over 8%. So pretty high. So when somebody says, yeah, we'll take TransAmerica's and move it from 7% illustratable rate down to 6%, then I would say you need to take the other carriers and move theirs from 6% down to 5% to make it apples to apples, because we don't just come up with that 7% arbitrarily. It's earned based off this 20-year look back. Okay, so pretty significant growth opportunity there, obviously. The global index account is similar, same floor, right? 75 bips. Again, this needs to be updated because we just increased this cap. So it's actually 13.25%. We increased it 25 bips. Same idea down here. You can see they break down the S&P, the Euro stock, and the Hang Seng, and you can see the 20-year average for each of those. The weighted exchange is 5.4%, but ours actually performs at a little over 8% again. If you took our 13% cap and you plugged it in, we're actually returning a little over 8%. So it's a strong IUL. Again, 100% participation. We are doing year over year